right, welcome in, everybody.
Yeah, welcome to the Now You Know Stock Challenge results. Very exciting.
Yes.
We've got a winner, and he's joining us on the call today, which is great. We're going to find out his winning strategy.
Yes.
I was not a winner, by the way.
You weren't a winner, but as we will see, you weren't much of a loser.
I didn't do as bad as the S&P 500. That's
you
true.
did lose,
Yep.
but you weren't.
It was a very interesting time that we did the challenge. We did the first half, things were going up, and the second half, things were going down. So it was very interesting. It meant that you had to change strategy midstream.
Yeah,
so
I think it's kind of fair.
Yeah.
You know, it wasn't just doldrums.
No.
Yeah, so.
And I think we might be able to learn something from this, because one of the interesting things here, if I got my stats right, is that the winner, Paolo Aprile, he had 80 trades, which I think was the most number of trades, whereas I was a very, boring investor. I just put it in, left it.
Yeah.
But the two winners, the number one, number two, Tony and Paolo, they both had a really high number of trades. So this is really interesting to talk to them, because they are obviously more trading than we are. So that's going to be interesting to find out how they did. All right, so I guess the first thing we should probably do is congratulate Paolo. Paolo, how did you do it? You won the EcoWare gift card.
Hey guys, how's it going? Yeah, I mute myself usually because I'm in a lot of Zoom meetings and stuff.
Yeah, so congratulations, just so that everyone knows, so you can just really rub it in their face. You started with $10,000 like the rest of us did. You ended up with $17,679.52. You had $7,600 in returns in a year. Really amazing returns.
Of fake money.
It's fake money.
I want to point out, this was not, we're not a bunch of high rollers here on our, with our pipes going, I wager I could make money. We were paper trading.
Right, and it's a great way for people to learn how to get into trading, because you get all the same ups and downs and emotional stuff, but it's just fake.
Right.
So, Paolo, how'd you do it?
So you kind of hit it on the head a little bit at the beginning, right? The market's obviously flipped, but the TLDR is using technical analysis is what I've been doing for the last, I guess, 1 to 2 years. I haven't been doing this just with paper trading. I've been doing this with actual trades. And so some of the stuff that I was doing is calling the top a little bit last year, and kind of frequent on the Tesla channel in the Slack, and even in the market updates channel. And something that me and a couple of guys caught on to is something that's called like a rising wedge, which is usually you have a rise in resistance and a rising of support, and usually causes a squeeze point where it ends up coming down, right? And so that's what I was seeing at the end of 2021 is, hey, this S&P 500 and the NASDAQ is going up and up and up and up and up. This is not normal. If you look at the charts on like a weekly trend or monthly trend or yearly trend, like there's a big overreaction in 2020 during March when it spiked down when the pandemic hit. And then obviously the money printer went on and we're flying like crazy. And it just felt unnatural, right? And so looking at that, I'm like, okay, well, let's see how I could use technical analysis to kind of get ahead of this and maybe look at, hey, like does buy and hold make sense, or can I do some trades? And typically I've been doing like just long-term holdings. And so this paper trade challenge is actually pretty good, because I actually got to implement some of the new strategy that I took in there. And if you look at some of the trades that I did in the logs, I started with like, the typical like, hey, I'm going to invest in biopharmaceuticals because, hey, Moderna is, the vaccine's coming out in 2021. That should increase the stock. Other things I was looking at are the supply chain issues. And so I had a couple buddies that work in logistics, and they're telling me, hey, like the shipping container companies are actually like pumping really good earnings because, there's tons of backlog in shipping containers, lots of freight that's being held up in China that's still coming on the way. And so that was the earlier trades of, okay, let's see if I can long-term hold some of these things. And it's just kept tanking and tanking and tanking. So that's when I started to change the strategy a little bit.
So at what point did you, did you really time it perfectly to the peak or like how off were you?
The best I did was, I did time a little bit. And so I'll take a step back. I've been a big Tesla holder for the last, I guess, 3-4 years. And I did get into margin a lot in 2020 and 2021. And so I had about 100 shares in Tesla that were fully on margin, right? And so as I'm seeing these warning signs of, hey, like we're about to get into a bubble. We're about to burst the bubble, right? Like I had to do some risk analysis there. Like, hey, do I really want to hold these 100 shares in margin while this is happening, right? Like then I use Fidelity, which is my main broker, and like they have some kind of calculator on there where you can like kind of see like, hey, what is the margin requirement look like if the underlying of the stock goes down a certain percentage points, and like, okay, like this isn't good. Like I'm getting out. And so I did time 100 shares at like around $1,200 back in 2021. And I did like a little blurb on that as far as like, you know, is it a good idea to hold or you know, not necessarily trade? Because like I bought these shares back in like I think April of 2021, and so I would have had to hold, you know, 1 year plus 1 day through April 2022. And so I was looking at like, well, if things burst as much as I think it is, one, I'm probably going to get margin called, and two, I'm going to lose all the money that I put in the stock in margin, and it's just going to be bad all around. So I hit it and I just sold it at $1,200. And then from then on, that's when I started like looking at like, okay, like what can I do from here on out? Like starting to use technical analysis a little bit to like predict what's going to happen more. And that's where it started getting interesting.
But I still want to go back to how did you get it right on that Tesla peak? Like what?
I didn't get it right. I missed, right? So the peak was actually 1243. So it was enough where I was looking at the risk versus reward, right? And so if you're looking at a long-term trend, if you look at the charts of Tesla, I mean, we're all bullish on Tesla, but you have to understand like the entire macro as a whole is just being pumped full of fake money, right? The money printer from the Federal Reserve. And so you got to look at it from that perspective. It's like, well, how long is this gravy train going to go? Like, as interest rates are climbing up, you know, this is probably not going to continue at this rate of speed for much longer, right? And I'm talking about like, you know, it's not linear. We went like an exponential, like almost like logarithmic, right? And so like, okay, how realistically do we think that this logarithmic change is going to happen going forward? Like probably not, as things start cycling down the macro, right? So I was like, that's enough for me to like weigh the risk versus reward. Like, do I really think that it's going to go to 1400 in the next 6 months while everything's kind of churning down, recession woes, and the market is about to pop? Maybe, maybe not, but it's not enough for me to take the chance, especially on margin shares, to hold it during that time. So I was like, okay, the risk versus reward is not there for me. I'm going to get out at least on these 100 shares. The remainder of my position, I'm going to hold on. And I kind of held that through the downturn a little bit.
I think it's funny that I said that you got out at the peak and you were like, no, I didn't hit it right. But I mean, if you got out at 1200 and it got to 1243 in my book, you called it really
That's
close.
like
it's close enough.
Yeah. So, I mean, good on you. That's amazing. Well, you had a question, Jesse, I see. So
yeah. So talk to me about technical analysis. What's your kind of strategy? How do you look at stuff? Kind of walk us through you know, some of the tools that you use, websites that you go to, all that kind of stuff, just because I'm really curious about what your strategies are.
Yeah, absolutely. So at the beginning of my journey, I guess.
Sorry, feel free to like share your screen if you want to pull anything up. We'll let you do that, and then everyone can see it. And I mean, you don't have to show us your holdings or brokerage or whatever. I just, you know, any kind of analysis tools and stuff like that.
Yeah, for sure. I'll share my browser here. Do you guys see my browser?
It's coming up. Let's see. Yep. Oh, look at, wow. Lines and graphs. All right. So
so this might be a little daunting, like looking at this, right? And so the thing I always say is when in doubt, zoom out, right? Start from the top level, because the top level is going to give you the most indication of what's happening at a longer trend. And so the tool that I'm using here is TradingView. And there's a lot of stuff going on here, but really at the end of the day, we're looking at what's going on with Tesla, where every candlestick is 1 month, right? And so we kind of, if you look at like regular tools, like maybe like Google stocks or like Yahoo index, stuff like that, it won't give you this kind of like granularity on what's going on, right? But there's a couple of things that's going on here in the monthly chart. What I'm seeing here is there is a channel, right? So we can draw up in here. And this is basically back in 2019 when we had the big squeeze from Tesla. So we went up exponentially, we hit 900, everybody was patting off the back. And then we went through that gully where we were sitting there like crying, you know, in 2021. And then we went through another rally right at the peak of, you know, the macro, right? And so what I'm looking here is basically what is the long-term trend. Now, there's one major thing that's happening. We think the stock is going up, which is great. But also, when we hit that peak, we started seeing signals that, hey, we're actually seeing a potential of a triple top. And triple top basically means that there is a resistance point, between the buyers and sellers. There's a resistance point that, the stock does not want to move past this point. And using technical analysis, a triple top indicates that it's going to be a bearish pattern. So once we hit a triple top, we're hitting a ceiling 3 times, and then we're going to reject. And that's basically what I was fearful of. When I sold, I was looking at maybe a double top, and even a double top is pretty bad, but a triple top is even worse, right? And so ever since that triple top, now we're identifying another channel, which is downward. And so what we're expecting here is that if this is a downward channel, you're going to see a lot of movement up and down, up and down, up and down. And it's hard to know these things because you can kind of get, an indication, like say, like if we are, let's say we're back here, right? We don't know what's ahead of us. It's easy to do this like retroactively, but if we only have this data points, like, well, we need to look at other indicators to see what's going on. And so I use other indicators on TradingView. There's the MACD, there's the RSI, stochastic indicator, vortex indicator. Other tools on TradingView that I use is the volume profile. That's the biggest one. Fibonacci retracements, Fibonacci extensions. So I use all these things, and basically the gist is that all these things tell the story in a different way. And if you have a lot of these data points that are kind of gearing the conversation towards a probability that is more than likely, because everybody's kind of congruing to these same things, like, hey, there's probably some merit in here, right? And so that's what I was seeing a lot of, is like a lot of the indicators were telling me that this was kind of the top. Okay, I'm going to push down, and I was expecting this to go down. And I didn't call it completely right because I totally missed this run up here from point 1 to point 2. And I didn't get this completely right either because I missed this one, but I did call this out a little ago in the Tesla channel, as far as like the peak over at 310, 315. And what I'm concerned of at this point is how low can we go? And you kind of, Zach, you kind of said something in a couple of Investor Club stories a while ago about a potential of 150 post split. And I think that's absolutely true. That could happen, right? Like if you compare Tesla against, the S&P 500 and the NASDAQ and the S&P 500 kind of have the similar thing going on. You've got a downward channel on the NASDAQ. On the S&P 500, you also have a downward channel. So it's kind of going in the same, everything's going in the same direction, right? So it's difficult to know when the bottom is, but we know until we get a confirmation of a different pattern, like this is what is probably going to happen, right? Like we might see some movements within this channel, but we won't know that we've broken out until we actually hit this inflection point here and break out of a channel. Or, maybe a different pattern starts to emerge where we're starting to oscillate between something like that, So that's kind of a long-winded story of what I've been doing over the last couple of years, but that's basically what I was starting to hone in on with this investor challenge. If you look at the logs, there was actually I think I have it here. In the logs, you kind of see me starting to change back in February. And something that is nice about paper trading is, hey, like if you have a new strategy that you wouldn't normally really do in real life, you could try to implement that strategy. And so the strategy that I started implementing here is like, well, why not ride the volatility waves, not just the ups, but also the downs. And so that's where I started doing short selling. And I've never done short selling. So I was like, okay, this is a perfect time to do it in a paper trade challenge, right? Like, so what is short selling? Is basically you're selling the shares short. So in this case, let me zoom this in real quick. In February 8th, I sold 10 shares short at what was it, 919.71 pre-split. And then, I sold at the top, I shorted at the top, and I covered at 915.91. So basically, I'm reaping the profits there on paper between 919 and 915. So it's like $4 a share. So that's like $40, right? And so this was just like a test, like, okay, can I short this? And the idea there is like, well, there's not options available in this paper trade challenge. So I'm going to simulate what I could do with options, right? Like instead of, buying a call or buying a put, I'm going to, buy the shares long, or I'm going to short the shares. And so that was kind of the idea. And from here on, I started applying this a little bit more and more, using technical analysis. And, just over time, they got a little bit better. I did take some losses here and there. Like if you look at the logs, like I definitely took some losses, but I think the gist of it is that I wasn't trading every single day. I was looking more at like, okay, zoom out, what's going on in the monthly, zoom in a little bit, what's going on in the weekly, zoom in, what's going on the daily. And then even within day to day, like, is there something within the day to day that's telling me that that a change might be happening like within the next couple of hours or the next couple of days? And that's what you kind of see in the logs here is like, the trades aren't like every single day. Sometimes they're like together, like the 3rd and the 2nd of March, but sometimes like we go farther out, like, the 17th of March, etc.
How did you do compared to your real portfolio? Like you mentioned now that because this was paper, you felt a little bit more free to do stuff. So I'm really trying to hone in on your emotions. Like obviously on paper, you can feel like, yeah, what the heck, I'll just try this. But like, are you like that in real life with your real money, or did you do it anywhere near as good?
I do it now in real life, and I've been pretty successful, at least in the last, I'd say 3-4 months. At the beginning of the pandemic, I was kind of tiptoeing around some of the new concepts and options. So I would consider myself a hybrid investor, I guess. Is I still hold some long-term shares, but I also am not afraid to capitalize on those gains. And so obviously I've realized some of those gains back at 1200. I've also realized some of those gains like around the 250s on the way down here. And I've learned new strategies using options on the writer side. So I don't like to play like I guess the counterparty, the typical person that buys options is like, I'm going to go buy an option and I'm going to say that Tesla is going to shoot to $250 by the end of this week, right? And so I might pay, a premium on that, like maybe $150 for the chance that, I could potentially sell 100 shares or just reap the premiums off of that call option, but I could lose all $150, right? And so that's kind of a sucker's bet. And so I think about it on the inverse, is like, okay, well, how does the house win all the time? They write options, right? And so that's where I actually got some help from some guys in the Slack, specifically Devesh, who goes by Mutant, and David S. They've been helping me a lot. And they taught me on to, covered calls and cash secured puts, put credit spreads. And that's where I've been making the majority of the money in the last 4 months, employing some of the technical analysis that I've learned, and also just like understanding more of these option trades. And even still, like regular shares, I've been holding and like selling those and flipping them depending on what's going on.
So talk to me about Slack. We try and get the message out to all of our Investor Club members that they should be using it. I'm sure not all of them are. How it sounds like you're using it really effectively. I see you posting all the time, and it seems like you're also making friends and people you trust and give you advice. Can you kind of give some advice to people out there who may not be using it that much on how they could use it?
I would just say, just go in there and try it. I mean, obviously the Tesla channel is the biggest one. I think it's got like about 1,800 or 2,000 people in there. We've kind of done this for about like a year or two since the Slack was born. Now we're like, we kind of have like a daily thread where it's basically like the daily chat room. And it's usually focused around Tesla, but sometimes it gets into like other things like the macro or, just other things like that. But just pop in there. I mean, at this point, a lot of the conversation kind of gets skewed with technical analysis. So that could be very intimidating, but it's also, I say it's all like, it's an opportunity to see what the thought process is going into what I'm doing and how I'm thinking and how I'm approaching things. And if you want to be a fly on the wall, that's great. If you want to ask questions, me or somebody else probably answer some of those questions. And there's other channels in there too. Like I know there's an options trading channel. Some conversation goes in there as well. Then there's other channels for different EV companies or different things like mining and stuff like that. So that was actually a channel I used a couple weeks ago when you guys were doing the Energy X thing. As I went into there, like, okay, let me see what I can find about this stuff, and I'll post what I know, and I don't really know that much, and so I'll kind of lean on somebody else that knows more about this mining lithium stuff. And so it's a good tool. I would just say try it out. Don't be afraid to just say hi. I don't know, everybody's pretty positive on the channel.
That's great. I love to hear that. So let's talk about the market bottom. This is what everyone wants to know, right? It's like, when are we going to get there and so forth? My thoughts on this were that the Fed has a lot to do with this, right? And it seems
Yeah.
like the recent data we've been seeing from the Fed, what the market seems to be thinking is that we'll max out in May. Obviously, plus or minus, but if it's true that the Fed kind of maxes out all their moves by May, what my kind of gut feeling is that pre-May, March or so, we might be seeing a real bottom. What are your thoughts on that? Like, and obviously we can't predict exactly what the Fed's going to do, but let's just play along with my idea that the Fed gets to their max in May. What would you think? Does that sound reasonable that we could actually be seeing a real true bottom around March or so?
I think that's absolutely reasonable. It's funny you say that, because no joke, I'm writing a box here for my target somewhere between, May and June. And so I'm thinking we're going to have a couple of things that are going on right now with tech. Is there's a fear of earning recession. And so that basically means that tech is not growing as fast as it used to be. And that's true, right? There's a lot of free money going around. There's a lot of stimulus. There's a lot of crazy multiples going on with these tech companies, and the bubble has bursted. Like if you look at Netflix, like Netflix has lost 90%. And I mean, they just had a recent rally because, they did better than expected, but still, it's still down year to date. And the money printer is gone. I would say don't fight the Fed on this. That's another thing that I subscribe to, is don't fight the cycle. And whether you're on the bullish or bearish side, just kind of go along with the ride. I mean, you can kind of consider yourself like a surfer on a wave in the ocean, right? Like, don't fight the current, ride the wave, whether it's up or down. And it's okay to change your mind. Like, don't get too dogmatic about like, oh, I'm bearish right now. I'm bearish right now. Like, if you thought you were bearish in 0.2 up here, yeah, you were right until something happened at 0.3. And if you're still bearish, thinking that we're still going to go down, you're going to miss this upswing on 0.4 here. So back to your earlier question, as far as the bottom, there's a possibility, we might still have recession earnings coming up in Q4. But I think optimistically could probably look to maybe canceling that out in Q1 earnings, not necessarily for Tesla, but just everybody in general. And I think once you get Q1 earnings, sometime in March, like you said, we'll start to get a little bit better idea of what's going on in the macro. Like you said, the Fed rate hikes, whether or not we're actually anywhere near combating inflation. I think right now the month over month is kind of annualizing to like 7.2% inflation, and their target rate is about 4.5%. And so we'll see if that happens. But the thing with the inflation rate and the Fed hikes is that it kind of takes a lot of time to cycle through the market. And so whatever we're seeing right now is kind of like a 6-month lag. We're kind of seeing the stuff that they did back in like March, April. In some markets it might move faster, but it just takes time to digest through the entire market, right? So as far as the bottom, I see a couple of things that could happen, right? If you're looking at a weekly view of the S&P 500, the biggest thing I've been seeing right now is support at the 200-week moving average. The 200-week moving average is 359.14, and the last couple of weeks we've been banging against that line really hard. We've dipped through it before. I think last week we actually dipped down to, what was it, 348.11. So we actually dipped under the 200-week moving average. And this week we're kind of like we're undecided. We have basically what's called a long-legged doji, which means that there's a lot of buyers at the high end, there's a lot of buyers at low end, but it's all a fugazi because the majority of them are right and smack in the middle. They're undecided. And so what we're seeing here is that the price action is consolidating at 365, and we have to make a decision here. Are we going to continue this trend down, which means that we follow this channel down, or are we going to go back up? Like, we could see something like this, right? And so I'll explain what's going on here in this section here. This is called the volume profile. And so every day there is transactions going between buyers and sellers, right? And those transactions are going on different prices, not necessarily always at a fixed price. There's more buyers out on the low side than there could be on the high side, or vice versa. And so what this tool is basically doing is it's taking a aggregation of all of the volume across the visible time period, which at this point goes back to like December 19th of December 30th of 2019, up until the current point in time. And what this is saying is that the majority of the volume is somewhere between 390 to 376 before we get like a point of resistance, right? Between that point, 379-ish, we start seeing a gap here, and I'll draw it here. There's a gap in volume. which means that whatever happens within this area, I would not trust it. I would not trust it at all. So like, if you see a rally going up to this point, that's great, but we're gonna top out at this point here because there's maximum resistance at that volume profile.
Mhm.
And so we can move up really fast through a gap in the volume profile, but we can also move down really fast in the volume profile. And so that's problematic, right? And so what is something good here is if you look at this bottom area, there are chunks of support below us, you know, between 335 all the way down to like 300, with the majority of the control down here at the 291 level on the S&P 500. And so you're looking at maybe like between 305 to maybe 275 at the worst, right? That it could get down to. And that kind of jives with what we were talking about earlier, right? Like if we keep going down this trend, like you said, through, you know, March or April, we could get down to these levels, you know, low 300s. Goldman Sachs has a price target of 310. That's obviously a 6 to 12 month price target. So it kind of jives with what we're thinking as far as like, you know, the Fed rate hikes kind of finish off sometime around then, and maybe they start pivoting into quantitative easing. I would definitely not fight with the Fed if they start pivoting and you're still in a bearish mindset. I mean, obviously approach it with like a grain of salt, but don't fight the Fed. If they're still rate hiking even past, you know, March of 2023, don't fight the Fed. Like go with the wave at that point. Because zooming out, this is where I get scared.
Mm-hmm.
When in doubt, always zoom out, right?
Mm-hmm.
When in doubt, you have to look at this. Let me make this a little bit bigger so it's easier to see. When in doubt, zoom out. And so we're looking at like a time period between like the financial crisis of 2008 all the way to the peaky top of, you know, the pandemic stuff. I mean, this is an insane run up. Like we're talking about like from the bottom of the financial crisis all the way to the top of the peaky, the top of the pandemic. I mean, that's a 520% change, right? Just doing a Fibonacci retracement on this, you can see that there's areas of support in this time range, right? And we're talking about like a long term, like a decades, more than a decade's worth of time. Like we have support potentially at 224. We have support psychologically at 273. We have another support at 322. So again, using the tools that we just talked about before, you know, the 200 period moving average on the monthly scale, where each stick is a month, the moving average down here is 209. So now it's significantly lower than the one before, right? And using the tools that we talked about before with the volume profile, this indicates that the range of support doesn't really start until basically the same thing, the 200 moving average, right? And so it just depends, right? And that kind of makes sense, right? Because if you look at the bottom of the pandemic, look where we're at. We're at this 218.26, which kind of lines up with the moving average, which kind of lines up with this profile here. So it would make sense to at least touch the lows of the pandemic. Obviously, the economy is a lot better now than before. What could happen is, you know, some kind of channel like that. Maybe that's okay. And I think that's fine, right? Because we had a channel that's going up, and what we're looking for is maybe an easing off, like something like this, right? That kind of takes the bleed off. And so we have to basically overcorrect a little bit so that we can take the rate of change out to even it out into like a more healthy growth, right? Like a healthier growth would probably be like that in a linear line.
Mm-hmm.
Wow.
That's
Wow.
really helpful, dude.
So, okay.
I can see why you came in first.
Yeah, I can see why you came in first, too. I want to say, first of all, thank you. This has been like an awesome little masterclass.
It really is.
On technical analysis. I want to ask you questions. Basically, I mean, this tool seems really powerful. It seems like, especially when you know how to use it, it's going to be very helpful. How did you get good at using this tool? Because, I mean, I think that everything that you just went through of showing us the different parts is really helpful, but I know that for me, I'm going to be like, where's the button where I can draw the yellow smudges? You know, how did you learn how to use it, and how can we kind of play around with it? Because it definitely feels like a tool that I want to just kind of play with.
Yeah, so you can just go to tradingview.com. I mean, I could put a referral link if you want, but it's not really necessary. You can make an account for free. The one thing that they do is they give you up to 3 indicators for free. Indicators are stuff like the volume profile, or maybe like the moving averages, or maybe like the MACD or the RSI. And so you get your choice of, pick and choose 3 slots and occupy those 3 slots with whatever you want, and then you can turn them off and on however you want to mix and match. Obviously, you can pay for more indicators and more pro features and stuff like that. This tool I actually got caught on by David S in the Slack. I wasn't using this before. I was using Webull because I do most of my trades in Fidelity because that's where like my core position is. But I was doing a little bit of day trading and stuff during around the time of this like paper trading challenge in Webull, and Webull actually had some good charting tools, and so that's where I kind of learned all my technical analysis. And like you said, like what does this button do? Like, okay, well, let's go look, right? Like what is a parallel channel? And another thing that I would recommend is go to Investopedia, MACD, like we can look that up, right? Like what is a MACD on Investopedia? And Investopedia has tons of information on what this stuff is, why it's important, why, what does it do? And you can kind of say like, oh, okay, this one goes to that thing. This is why I would use it. You can do another one like the RSI or the Fibonacci retracement or extension. So Investopedia is another good tool. Another one that I use a lot, and this is a big one. This is another plug for the Slack because I didn't know about this tool until Alan Johnson on the Slack told me about it. Is there's a website called maximum-pain.com, which basically takes all of the orders and options for any given stock, right? And so in the case of Tesla, we can plug this in here, and we can kind of see, okay, what's going on in this week's expiration in stock options for Tesla. And it's a little bit slow sometimes because it's got to show through the entire flow. But in this case, we're looking at this Friday's expiry. This is something that like I had to learn over time on how to read, and it doesn't make sense until you think about it from the mindset of the option writer and not the option buyer, because this is basically like a viewport into what the house is thinking, right? And so the viewport of here is, okay, well, there's a bunch of puts at the 200 level. So this is bad, right? Like, well, not necessarily. You have to think about it from the inverse position, right? The way option writers make money, and I would say myself as well, is if I'm going to sell a put option at $200, somebody's going to pay me money for that option, right? And so I don't want to lose out on that play. I want to keep the money that they gave me, right? Let's say like, Zach, you bought the option for me for $500. Okay, then I want the price to stay above the strike, right? I want it to be 205, 210. I don't really care. Like it just needs to be above $200, so I can take your $500 and keep it. And so that's where the mentality goes in here. Like, okay, there's a lot of puts here. That's bad. No, it's good because there's a lot of bullish momentum here. So you can see on the open interest chart here. This is basically all of the open interest across all of the strikes in the option chain for the week. And we see there's a huge amount of bullish indicators here at the 200 level. And that might kind of make sense, right? Like if you go look at the technical analysis in the other app, like you see a lot of volume profile stacking up at 200. Inversely, there's a lot of resistance this week for 250. So that tells you here that the playing ground for this week is somewhere between 200 and 250. Maybe the congruence is somewhere down in the 225 range, right? If we scroll down in this tool, you can kind of see where the volume is right now. So the volume is actually like the options that are flowing currently in the market for this week. And there's still a lot of puts at 200, which, could be good or could be bad. I'm thinking it's still good because there's still a lot of bullish momentum above 200. But you see that there's resistance points at 220, 230, 240, 250. But also there's another bullish position here at 220, right? So to me, it seems like the bulls are trying to push this above 220 as much as possible because earnings is tonight. And you're going to see a lot of resistance against that 220 at the 230, 240, 250 level. And so if you want to kind of play it safe on the bullish side, like you'd be looking for something like a put credit spread, like at the 200 level, because most likely, we might be somewhere between like 215, 210 on the negative side. But if Tesla earnings are really good today, like it could rocket the stock up, right? And so that means that you'd be pretty safe being at those levels. You could also, if you don't want to play the side of the house, you could buy just buy the options. In that case, you buy a call option, which you perfectly can do. But I would recommend always paper trade options, because I've done this in the past before. I've blown up my Robinhood portfolio. Like I did Like I started using Robinhood when it first came out, like back in like 2017 or 2018 or whatever. And I was just buying and sharing, like buying and selling shares. And that's all I did. And I made like, I think like my assets under management got to like 15,000 when I started with like 6,000 or something like that. And that took me like a couple of years to build up. And this is when I wasn't doing technical analysis. I was just kind of like winging it. And then I got into options right at March of 2020. And so I blew it up because I didn't know what I was doing, right? And that's another thing where like if you do this stuff on paper trading, whether you understand it or not, like you have a lot better chance of survival because like you'll learn the mechanics, you'll start to learn the you know what does what, why things do what, and you can take a strategy that you applied in paper trading and then like pare it down to a smaller position on real money. And I would always recommend do that is scale down whatever you're trying to do on paper trade in your real portfolio because you might be wrong, right? And you don't want to screw your risk versus reward. You want to have continuous gains, not like big lottery winnings. You know what I mean?
That's really interesting. So it sounds like it, even going forward, even if we don't, do another challenge, it's important for investors out there to do their own paper trading because it is a tool. And I think the important thing for people who are watching this who are like, yeah, but that sounds like work, Zach, is that, yeah, it is work, but you're actually going to stay much more focused because you'll actually have put trades in and out of the market as opposed to just pretending every day, like in your mind, like, oh, I would have traded today. That you're actually going to have a log, a record that you can go back and learn from.
I think because there's this thing where if you, like in a YouTube video, I've been learning this because I'm a YouTuber, but if you put up like choose A, B, C, or D, and then, okay, did you guess? Here it is what it is. If you don't like write it down, your brain, if you're watching it, it will go like D, I think. It could be C. And then it's like, it was B. And you're like, yeah, B, B, B. And your brain will just be like, I thought it was B. Mm-hmm. It will do that. Like your brain will try to trick you. Like that's your ego. Mm-hmm. And you will do the exact same thing with trades where you're just like, oh yeah, I would have bought at the exact bottom. Mm-hmm. It's what we hear all the time from mostly inexperienced traders where they're saying like, I would have bought at the bottom and I would have sold at the top and I would have made $1 bajillion million. Right. So I think that it is really important to be accountable to yourself because you aren't as good as your brain wants you to think you are. Mm-hmm. Which kind of sucks because you're going to maybe learn, but here's the thing, you will learn something. Yeah. And that is the cool part about paper trading because instead of going, oh no, my money, you're going, oh no, the game, but actually, oh, that's interesting.
So Paolo, to that point, we forced you to do paper trading on Market Watch because they had like the challenge that we could use. But if you had your choice, where would you paper trade?
I would still do Market Watch. Market Watch was pretty fine.
It was fine? Okay.
We tried to do this with the other one, and the other one had like a 15-minute lag, and so that's where the cheater like used that 15-minute lag for their advantage. But the Market Watch paper trade is pretty good. Like the lag is like within a minute. Like nobody's gonna really be cheating too much within a minute's time. Like you gotta be sitting there like watching it nonstop. Mm-hmm. Who has time for that, right? But especially like if you're just trying to learn like technical analysis or just like what is your time horizon? Like maybe you want to do like trades on the weekly, like maybe one trade a week kind of a thing, or one trade a month, learn technical analysis, use a charting tool like maybe TradingView. If you want, you can use Webull. You don't have to sign up a deposit to use Webull. You can just download their client.
And but I would sorry, Paulo, please put your referral code. You've earned it. I will just say that you've earned it. Please, people, I don't know what the rewards are. Hopefully it's money or stocks or something. Like I hope it's good. Or maybe you just get free.
They just give you like free time or something like
that. I think that you deserve it. With that alone, that little talk alone, I learned a whole lot. Yep. And I thought that I knew stuff. Again, my brain trying to trick me into thinking that I'm awesome.
We have a few minutes left. I don't want to take all of Paulo's time, but if you do have a question, feel free to digitally raise your hand down in the Zoom. There is under
reactions, and then raise hand. There are few of us, I think, enough that you could also just maybe unmute yourself.
Yeah, and the other thing is, I mean, obviously, Paolo is on the Slack, and he's just told you he's on the Tesla channel a lot, so I'm sure you can go
and
there,
he is.
and I'll bet you'll be getting a lot more questions. But no, this is really super helpful, and I also just think that the huge part about this that makes me feel really good is when we talk to other smart investors, and you have a question or something, this makes you feel like you're supported. Like, you know, here's my dumb idea that the market might bottom in April. Like, what do you think? And then you can talk about it. And then you don't feel like you're, because watching CNBC and other things, I often just feel like I'm just ultra confused because they're not really trying to help you, in my opinion. They're just trying to get you to keep watching. Whereas when you talk to smart investors who obviously you've had a whole year here and you've made these returns, then you know what you're talking about. This wasn't just throwing darts against the wall.
Yeah, thanks. Yeah, I mean, I definitely, I did make 76% in paper trades, but I mean, I am making real money now.
That's awesome.
The beginning of the year, I was learning the side of the house as far as like selling cash secured puts and maybe buying leaps. And, you know, if you look at like Emmett Peppers, like we all heard the famous story about how he got rich with buying leaps, right? Like, well, yeah, that makes sense when, you know, there's a bunch of squeezes going up, you know, with free money and whatnot, and even with Tesla squeezing up. But, you know, during a down market, leaps are actually a bad idea because you just lose theta decay. Like the options just lose price over time. And so I made some bad choices at the beginning of the year. At this point, I've washed away most of those most of those losses. I'm actually probably net positive, maybe like 60K. If I don't count the actual Tesla core position that I sold like a couple of weeks ago. That one kind of skews it a little bit, but 60K year to date, it's pretty good. I try not to like trade every day. Usually I put a couple things here and there, maybe on the daily, and I kind of watch it. I do work from home, and so I know you made a comment earlier, Jesse, in another ICBS video that you know, like if you're just phoning it in, like you have more time. Like, yeah, that's kind of true. But I do work sometimes. Like I'll switch over to this tab. Like, okay, let's see what Tesla's doing. Okay, yeah, let's see what macro's doing. You know, that's another thing. Another thing I would call out is the Fed rate monitoring tool on investing.com. Like this is another good one. It'll give you a viewport of like what the market is expecting as far as like Fed rate hikes. You know, right now there's a 97.4% that they'll do a 75 basis point hike. November and December right now, they're kind of calculating, what is this, another 50 basis points. I think that kind of makes sense. If we get particularly bad readings from PCI or CPI, you know, that might change. Once we get those readings from October in November, that might change December's read. Another one I would recommend is the Market Watch economic calendar. This tells you like major events of what's going on. I think today the Federal Reserve pumped out the Beige Book. That's another shout out to David S. because he helps me a lot with the bonds and the Fed speak and all that stuff, because that's just gobbledygook to me. And so like he explains it to me like a 5-year-old because that helps a lot. I mean, the Beige Book is the viewport into what the Federal Reserve is thinking about right now in the different sections of the country, right? Like, you know, what's going on in Boston, what's going on in San Francisco, and just reading this lightly because it just came out like literally like an hour ago. Like it seems like things are peaking in terms of the labor market and peaking in terms of real estate, and so maybe we'll see some indications on the downside later this year. And like you said earlier, Zach, like we might start seeing that bottom coming forward like in Q1, hopefully.
Now, a question about Tesla earnings and like when big events are coming up for Tesla. So, you know, like we just saw AI day number 2, and then it always seems to me that I can't predict what the market's going to do the next day. It seems like they could have a great earnings day, and then the next day, everyone's like, it wasn't as good as we thought. Or AI day number 2 blew me away, but then the market was kind of like, whatever.
Funny
Tesla
robot.
Yeah.
Yeah.
So what are your thoughts? Because you've seen many, many Tesla events, and then you've seen the stock price the next day. What are your thoughts? Is it... has it gotten to a point where you can kind of predict what's going to happen, or is it just unpredictable?
It's still not like 100% prediction, right? I would think of it as probabilities, right? So right now what I'm seeing is like in the hourly charts, right? We've got this crazy downward channel since I guess like September 21st, right? We've been kind of more or less like flowing in this channel up or down. Sometimes we've had a couple points where we go outside of the channel to the upside, a couple times where we might have like cut out a little bit on the downside. But what I'm seeing at this point is potentially quote unquote a bottom. Don't hold me to that. It could be well that we do a dead cat bounce. A dead cat bounce is basically, you know, when the stock falls down and then it goes up a little bit and then it continues downward, right? And so there's a possibility that this whole time we've been going down, we're going to go up and then we come straight back down, right? Similarly to the S&P 500, we can look at the volume profile, and this is where I said it earlier, right? Like there's a lot of missing support below us. Where I think we're at critical levels here at Tesla. We're at 220. When I was calling out this triple top, I was like, hey, like everything above us here is fake. Like it's all fake volume. Like it doesn't start until 220. 220 and below is where the real volume starts. But also there is a gap here, right? You can see that there's a gap, and this gap basically ends around like $150, right? So it's very possible that we could move down where we're at like 220 or 219 right now. So we could move down, you know, another 30%. Now, does this mean that we're going to hit 30% in the next day? No. I mean, we're looking at a weekly time, right? So this could take several weeks. It could take a month. It just depends on what the trend is going, right? And so if we zoom into the hourly chart where I'm thinking there might be a potential that earnings is really good, we can play that on the flip side where we might see a potential rise up. And from what I'm seeing at this point is if we do rise up, I am thinking we would only rise up maybe like to 245, maybe 265 at the most. And the reason for that is we have those downward channels acting as resistances. We also have this upward channel, the big one since 2019 that we fell out of. So right now we haven't spent too much time out of it. We've only spent, you know, a couple of weeks outside of a channel that's lasted, you know, several years. So don't take that as confirmation. But what could happen is we could climb up, you know, if earnings are really good, we could climb up to this resistance point, and then we'd have to see a decision, right? We'd have to go back into the channel and then continue back up our bullish run, or we could reject and we could fall back down into this other channel, which has been falling since, you know, the top of the market. And if that's the case, then that leads more evidence of, you know, hey, we could hit that 150 as we cycle up and down within this channel, right?
So kind of a crucial period right now, actually. I mean, as you're saying, like I wouldn't be surprised if we had a dead cat bounce. Like it does seem like earnings are probably going to be strong and they will push things higher, but I agree with you. I feel like retail hasn't quite felt enough pain yet. And I just feel like from my experience with markets, until everyone you meet is crying, you haven't hit the bottom yet. And I just feel like right now, the job market is still hot. And I just feel like there's not enough pain for us to have hit the bottom. That's why I'm feeling like it's going to be in the spring, but I don't know.
Absolutely, yeah. That's the reason why I sold out. I mean, I could have sold out here. I think some other people actually did better than me selling out. But again, I still had margin debt, which I don't recommend anybody be on margin right now. Do not be in margin. Only do cash. But I had some margin debts. Plus, I kind of realigned what I wanted to do with the capital. At this point, I'm kind of waiting to see what the real estate market is going to do. I'm expecting that real estate is going to lag in the 6 to 12 months, and we're seeing evidences right now that, especially in my area here in Phoenix, we're seeing prices go down, especially in the West Valley and even the North Valley, like kind of the edges of the town. Like the price is going down. Flagstaff is like I think number 10 in the country that is overvalued by Merrill Lynch, and so I'm looking to convert my Tesla gains and my long-term Tesla gains into, you know, real estate properties, right? And so that is a longer term investment there because it's real estate.
Right. Yeah, I mean, that's another whole big one because I know a lot of people watching, even you, Jesse, thinking about real estate, right? And the mortgage rates are going up, which sucks. Prices haven't really come down much in our area, which sucks. But yeah, we're all kind of waiting to see if there's just going to be a big dip in real estate prices, or if they're going to have, you know, magically in certain regions of the country just keep their value. Yeah. And again, to me, the weird part, and we just talked to Tom Nash about this, and that episode will be coming out soon. It's just so weird that unemployment hasn't really, I mean, unemployment's low as it's ever been. And normally when you're talking recession, that's the first thing you feel the pain on. So this is so weird to me because historically this doesn't make any sense to me at all. But it could be lagging. It could be the kind of thing where we're going to start to feel it. It's just that I've heard of all the big companies doing their layoffs and I haven't seen the pain yet. So that's why I'm really confused and trying to figure out, like, is this because those people aren't filing for unemployment, so we're not really getting to see that data? Are they doing like gig economy work, so that's why? Or, you know, I don't know.
They're just hanging out
Are
with,
they
with their stimmy money for another few months until they decide.
Some states are still doing stimulus too. It's kind of crazy. Like,
I know.
there's a couple, like, I think a dozen states are still doing stimulus checks, and it's like, guys,
Yeah.
you got to stop doing this. I mean, I understand, like, you know, things are getting expensive. Like, if I go to my budget, like my grocery budget is like moving like crazy, like every month over month, you know, like I think a gallon of milk over here is like $5. It's like, what the heck?
Yeah.
So, I mean, I understand, you know, that not everybody, you know, can afford things, but at the same time, like, printing more money is not going to help the problem. Like, printing money is what we've done since 2008, you know. And if you listen to the All In podcast, Chamath Palihapitiya is talking about how we printed 13 trillion since 2008.
Yeah.
Like, that's 13 trillion of funny money that has to go away to normalize the economy.
Well, and that's just that's just US dollar printed. If you look at the world, we're talking probably more like 35 trillion, and that all has to work through the world economy before we can get back to normal. And that's why I don't even know if my idea about the spring is right, because it feels like it takes even longer than that for that money to work through. But I don't know. It's such a mind-blowing amount of money. I can't really even like wrap my head around it.
That's
right. We could be wrong with the spring thing, right? We just, like, I would recommend just, you know, wait for confirmation, see if, you know, especially with the S&P 500, like if we start seeing support around that 339, because then we start catching on that volume profile. If we don't catch on that, we just keep falling through, then okay, well, the next volume profile chunk is around, you know, the 310 to 290 level. Just wait for confirmation there. Like, don't be too eager to get in.
Yeah. Well, Paolo, thank you so much for your time today. Again, congratulations. We're going to be debating whether we do another stock challenge. I was kind of leaning against it because I was like, I don't know if people are enjoying it, but please put in the comments if you guys would like to do another challenge. If it would give you kind of almost like the reason to do it, then we'll definitely do it again, because I think it is a very valuable thing. And yeah, just congratulations on all the work you put in. And I'm so glad that it's also that you're not just paper trading, that you're also using a lot of this in your real assets. And so that's really great to hear that you're doing well.
Well, it's cool to see that you converted some of your paper trading strategies into your real world strategies once you kind of have proved them out. That's kind of a cool part about paper trading. Although the only issue is when you're paper trading at a certain time, and then times change,
right?
And then sometimes maybe the strategies aren't going to work. So it's obviously not a sure thing. Nothing in investing is.
And thank you for being so active on Slack. I know that a lot of people are probably just wallflowers watching you and listening to you, and that's valuable too. So that's really great.
Yeah.
Yeah, definitely. Thank you for that. The other thing I'll say about paper trading is there's no tax consequences in paper trading. So be careful about that, right? Because if you're trying to emulate trades from paper trading into a taxable account, now you've got a taxable liability. So that's what I would recommend. Like, hey, like maybe if you're going to do some slower trades, or, you know, you're thinking about realizing gains on anything, do it on a tax advantage account, you know, the Roth IRA or traditional IRA. Even your 401k, you could rebalance that. It's some people don't even understand that. Like, you know, they think that the 401k is just like a thing that you just dump money into. Well, you can actually like allocate a percentage of your portfolio between, you know, mutual funds, which track the S&P 500 and other things, or you can actually go on cash reserve. And so what's funny is, like, I actually got a new job back in March, and since March, like, I'm overperforming against the market. Because why? Like, I put 65% of my money in the cash position in my 401k. It's not that I'm doing better. Like, all I can do is pick a mutual fund or cash. And I was like, okay, I'm going to put 65% in cash and the rest in a mutual fund. And I'm outperforming by like losing -1% or something. It's ridiculous.
Thank you again, everybody. This is a lot of fun. If you have questions for Paolo, I think I can speak for you. You're probably going to be over on the Slack channel at some point, so feel free to.
Oh yeah, we'll be watching the Tesla earnings today. Like, I've got some coals in the fire today. Hopefully, I'm right about this, but yeah,
awesome.
I'll be watching that.
And just thank you for sharing all of your tips and tricks there. And people, please do use his referral codes. I think there's a lot of really great tools. It's great that they're free to start as well.
Feel free to just post them pretty much everywhere with your referral code. Yep. I just think
you earned it.
Anyone who's watched this, like, put it in the comments of this video when we finally upload it. You know, put it on the YouTube and the Patreon and in Slack, because I think that a lot of people are going to want to play around with this.
Definitely.
And it's great that you can start with free, but I think that plenty of people can realize excellent gains if they're going to be using this wisely. So thank you so much it was a great introduction and masterclass on it. All right, we'll see you everyone next time. Now you know.